Hello and welcome to today's Crypto Blast. It is Monday, the 3rd of November, all day. You join myself and Cam from InstitutionalFi, where we will be looking through the market moving news, flows and prices that are impacting crypto markets. As a reminder, this is more of a view on the institutional flows and news, etc. We're staying away from the grifting, the meme coins, the shit coins and whatnot. This is the stuff that we believe should be adding serious value to those, especially those that are looking for investments and just an insight into what is going on. But speaking of investments, as usual, nothing discussed on this podcast is trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan, Cam, or InstitutionalFi. And with that done and out the way, Cam, how are you?
Doing well. How are you?
I'm not too bad, mate. I'm not too bad. It's blink and you miss it the weekend, but them's the breaks. What's been going on in crypto?
They are the rules. Yeah. A whole lot of selling, and let's jump into it.
Yeah.
Although there was so many purchasing news this morning, so we'll jump into the news after we do a little price recap. So Bitcoin currently trading at $107,700, down 6.5% week on week. Ethereum very, very similarly, $3,700 at the moment, down 10% week on week. Moving down the other altcoins, XRP $2.40, kind of holding on to that $2.40 mark there, 8% down the week. BNB 12% down the week, barely holding on to $1,000. There's a lot of red. Now, it's not all doom and gloom, but it was an interesting note posted by Caleb Fanzin this morning, where he called it the majors dominance chart. And what it does is it combines the market cap of Bitcoin, Ethereum, XRP, Solana, BNB, USDT, and USDC. So adding in some stablecoins there. And together, these assets represent 91% of the crypto market cap. Now, whilst we're starting to see a sell-off across altcoins and the majors as well, it's up. It's moving to newer highs. Now, obviously, this could be in part down to the fact that it's got a cut to USDT, USDC, so stablecoins in the mix here with market cap. So there could be selling of assets and swapping into stablecoins for the short term. But it's an interesting view to show actually, altcoins make up a very, very, very small part of the larger market.
Yeah. I suppose, one of the, we talk about the benefits of stablecoins, etc. For some time, for a number of reasons, not just cross-border payments, etc. But also, I suppose, before stablecoins came out, when you wanted to take, your risk off in crypto, you basically had to sell your crypto back into fiat. But now with the stablecoins, as they're pegged, if you do want to take your risk off, from Bitcoin or Ethereum or Solana, whatever, you don't have to do that whole bigger kind of shift, because you just park it in stable coins, which is going to not lose value against the dollar, and then you can jump straight back in when you want to.
Yeah, exactly. Like you don't have to exit the ecosystem now.
Yeah,
which is lovely. It's an interesting question though. Normally, when you start to see BTC selling 6% down on the week, you'd start to see altcoins pick up and catch a bid. I posted a note this morning, follow along from that, just talking as to why we've not necessarily seen an altcoin season. Now, there are many different reasons, but one particular area I was focusing on is the answer could potentially be found in the absence of retail inflows. Now, what do we mean by this? Well, history shows us that altcoin seasons are triggered by retail capital rotating from majors down to the altcoin sector. However, there's been a dramatic decline in BTC ownership. And so that power of capital rotation has been less effective on the altcoin sector, because like we've mentioned before, so many times on the Crypto Blast, there is capital coming into crypto, but it's not going down, to altcoins, which are 25 down on the market sector list and 102 down, these really, really small coins. Retail does do that. Retail does like to take a gamble. And, for the institutions, they are focusing heavily on the majors here. So that is our crypto market recap. Yeah, I think we've covered off pretty much everything we want to talk about. We'll jump straight in now to the news that's happened over the weekend.
Like you were saying that like it was over. I was like, we've only been going a couple of minutes.
Come on, Cam, you're not prepared for today.
Yeah, I was like, what?
So we'll start off.
I need to start doing my dance routine, a bit of song.
Yeah. A little singing and dancing. Take your tie off, come on. I'm buying a couple of those. So the European Commission is preparing to take its next step toward completing the EU's Capital Markets Union. So they're looking to integrate crypto exchanges and clearinghouses under a single supervisory framework. The plan envisions an SEC-like regime granting the ESMA expandatory authority over cross-border entities such as crypto asset service providers and post-trade infrastructures. Last week, US spot Bitcoin ETFs recorded $799 billion in weekly net outflows, marking another week of risk-off sentiment. So not a single of the 12 products saw inflows. By contrast, though, spot Ethereum ETFs managed to reverse the trend and see $15 million in inflows, led by Grayscale's E Fund, which managed to pull in $56 million by weekend. In Asia, the Hong Kong regulatories have pushed back on the digital asset treasury transformation plans of at least 5 listed companies, effectively blocking their attempts to convert into pure crypto holders. The city continues to enforce its distinction between operating companies and balance sheet crypto plays. So yesterday, President Donald Trump addressed his pardon on the Binance founder CZ in a 60 Minutes interview, saying that he didn't know him personally, but saw case as part of a witch hunt by the prior administration. He noted that his sons are actively in the crypto industry, but emphasized that they're not government officials, so it's okay.
Yeah, right. Yeah.
Bloomberg reports that several backers of the Canton network are in talks to raise roughly $500 million to establish a listed entity focused on Canton Coin. Yes, Canton Coin. The vehicle is expected to act as a super validator incubator for network applications, with DRW Holdings and Liberty City Ventures likely providing most of the equity. Bybit has stopped accepting new user registrations in Japan from October 31st. This aligns with local regulatory rules. Existing accounts are unaffected for now, though further restrictions are possible in the near future. Nordea Bank, the largest lender in the Nordics, will begin offering crypto-linked synthetic ETPs in December of this year via CoinShares. The execution-only products represent a cautious step toward broader crypto integrations in Europe's regulated banking space. It's a very positive step coming in from the Nordics.
Nice.
Crypto posted blowout Q3 results and their earnings, $433 million in net income. That was around $1.50 per share. It was a 6-fold increase from a year ago, driven by elevated volatility and trading activity. Transaction revenue jumped to over $1 billion, nearly doubling year over year. Coinbase also grew its Bitcoin holdings by $299 million to over 14,500 BTC. CEO Brian Armstrong announced new plans to integrate prediction markets and tokenized equities, aiming to build an everything app for finance. Toward the end of the call, he did something which may be slightly controversial. So, along with his talks of integrating a predictive market into Coinbase, he said that he started listing off things in prediction markets where bets have been placed for things that he should say. So he started literally reading them out. And he said, but after this call, he basically said, oh, this was based off of an internal chat that he had in Coinbase. And someone said, look, someone's made a market for you to say these words. So then he just started reeling these words out.
Wow. Brave new world, but then why not, right?
Yeah, exactly. Is it market signaling or is it just modernization in a world where this information is free flowing?
Yeah, if there's a market for you to say something, why wouldn't you say it? You know what I mean? It's not market signaling. It's basically just gaming the system.
Yeah.
And at some point, you're going to wonder if this kind of thing can carry on. There'll be a limit, and there'll be people wondering. When you know that the people that are that are being named in the market, you then need inside information whether or not they're deciding to say or not say it, because obviously you can take both sides of this trade. So it might come to a point when because of that, people just give these type of markets a broader kind of, leave them some room sort of thing, to give them a wide berth. Because unless you've got the inside line that, yes, he is going to say it, or no, he's purposely not going to say the keywords, why would you get involved?
So it could actually cool it off a little bit,
Well, it might do. Well, look, if I know that CEOs or whoever are looking at these markets, they might decide that they'll make more money if they don't say it, or they can fuck with the market if they don't say it, or they might say it, or they might turn around and say, yes, I am going to say it. But unless you know what they're going to do ahead of time, why take the gamble?
But yeah, fair enough.
Yeah, again, there's a lot of degenerates out there that will gamble regardless. But for me, the shrewder money would, at least play on something that you have some kind of inkling that isn't going to be manipulated,
Yeah.
unless you know which way it's being manipulated. In that case, fill your boots.
Like send a text on the inside a group chat. Yeah, anyway.
Yeah, exactly. And that's why if you're not on the inside, why would you bet those kind of markets?
But that's exactly it. It is the risk that you take. So Strategy reported Q3 net income of $2.8 billion, mostly from unrealized gains on its vast Bitcoin holdings. They now valued those Bitcoin holdings at $69 billion. Despite the rebound, its shares remained down 45% from last November, which concerns about leverage and debt issuance are persisting. DYDX plans to enter the US spot market by year end, starting with Solana and other major assets, though perpetual contracts will remain excluded for now. In other DAPCO news, Nakamoto Holdings, which we talked about a couple months back and had quite a lot of hype around it, has seen the stock crash more than 98% following a $563 million PIPE deal that has triggered aggressive selling from shareholders. Grayscale's Zach Pandal expects a potential US spot Solana ETF could replicate the early success of Bitcoin and Ethereum funds, absorbing up to 5% of total Solana supply, which would have a valuation of over $5 billion at current prices. And also talking about that, Bitwise had a very, very successful week. In fact, a record-breaking week for Bitwise's B-Sol. Besides a big volume, it led all crypto ETPs by a country mile with inflows of $417 million. That includes BlackRock's Bitcoin ETF IBIT, which is rare that it has such a terrible week in terms of outflows. But it does have a bit of testament there to the work that Bitwise have been doing and the demand coming in for a Solana staked product there via an ETF. It also managed to rank 16th overall in the ETFs for flows last week. So yeah, massive debut week. In other news, again, I keep saying the story that just won't die out of the headlines. SBF's account started posting again over the weekend, saying that FTX was never insolvent and the $8 billion in custom assets owed when FTX filed for bankruptcy protection never left the platform, and all customers will receive 119% to 143% of repayment, with about 98% of creditors already paid 120% after covering $8 billion in claims and $1 billion in legal fees. The bankruptcy estate still has $8 billion left. The thing is, though, is wrong. Like,
yeah, I mean, this is brass tacks. He's talking out of his arse.
Yeah. FTX creditors were repaid based on November 2022 prices rather than current values, so causing major losses for holders of those assets. Is it me, or is these actions basically displaying a lack of empathy and an ability to learn?
But like I genuinely think he's so on the spectrum. He does not know that I almost guarantee he still doesn't quite understand that he's in the wrong.
Yeah,
and that was the big problem. He genuinely didn't see he was doing anything wrong because it was for the greater good. Forgetting the fact that he committed various and multiple crimes that are indisputable. Forgetting the fact that they tried skirting around election kind of funding by using shell companies and also all this, which proven to be illegal, and proven that he didn't even deny he did it. The guy's warped, just quite frankly. He's just very warped and doesn't understand that he's done anything wrong.
No, yeah, exactly.
And the sad thing is, when he comes out, I have almost complete belief that he's going to set up, do the same thing, or be employed by someone to do the same thing, and no one will learn a lesson. And it's a shower of shit.
FTX 2.0, you heard it here first.
Well, mate, would you bet against that idea?
No, of course not.
No, exactly. Oh, God.
No, absolutely not. So after this post on X, FTX creditor representative Sunil, he stated that the real crypto recovery rate for FTX creditors ranges between 9% and 46%. And he said the actual value could be even lower due to the current high prices of crypto.
Ridiculous.
Yeah, exactly. And this is all based on the fact that, prices were pegged against, that of November 2022. So, yeah, anyway, we'll move on from that story. Global regulators are reassessing Basel 2022 crypto capital standards before their 2026 implementation as banks lobby for more balanced treatment, especially for stablecoin holdings. The review signals growing acknowledgement of the restrictive capital rules risk pushing legitimate crypto activities outside of the banking system. The T3 Financial Crime Unit, a cooperation between Tether, Tron, and TRM Labs, has frozen over $300 million in illicit crypto since its 2024 launch. The initiative underlines how private crypto players are increasingly integrated into international enforcement efforts. It's an interesting story. Essentially, you've just formed a government agency to tackle cybercrime. But you're the company that issues the asset, which is it's a bit of a grey area in my opinion, especially if you're trying to go, well, we're decentralized. Well, hold on a minute. If you're freezing assets because it's linked to a payment that you don't particularly like, whether it be illegal or not, well, then you're working as an entity to bring it to be centralized, not decentralized. But that is a conversation which doesn't go well with regulation and adoption. It very much needs to be some centralized effort in order to combat crime. Tether's Q3 report confirmed more than $10 billion in profit so far this year, with $135 billion in US Treasury exposure, placing it among the top 20 holders globally. With USDT circulating supply now currently over $174 billion and $6.8 billion in surplus reserves, Tether is diversifying into AI and renewable energy ventures. Coinbase is reportedly in late-stage talks to acquire stablecoin infrastructure startup BVNK for about $2 billion, underscoring the strategic role of stablecoins, which accounted for 1/5 of its Q3 revenue. And this morning, we've seen quite a lot of news regarding Bitcoin miners. In fact, Iron just announced a deal for $9.7 billion with Microsoft for AI cloud contracts. There was another one. Hive also announced another role in expanding its reach into the AI infrastructure, which is massive. And we talk about that figure there being $15 billion in Bitcoin mining deals this morning. The sector itself, the Bitcoin mining sector, is only $65 billion. So Matthew Siegel from Van Eck, he mentioned this morning as well. He said, imagine if oil majors announced a deal worth 20% of their market cap in one day. That just kind of makes you understand how fast AI is rewiring global energy stacks. And a conversation that we had last week was where some of these countries are forcing or banning Bitcoin mining to turn their attention over to AI. So there's no doubt that we're starting to see a major shift in contract partnerships between tech companies merging with Bitcoin miners in order to go down the AI avenue. And I believe that's going to be a lot from me this morning. Actually, lastly, we've just seen this. Strategy has acquired 397 BTC for $45 million at an average of $114,000. This brings their total Bitcoin average to $74,057.
And
Bitcoin.
What are we trading right now in Bitcoin?
We're currently trading 107,000.
Lovely jubbly, still above the 100. Top banana.
Still above 100.
Awesome. Well, Cam, thank you so much for the update. Listeners, thank you so much for tuning in. And we'll be back Wednesday for more news and flows, etc., that's impacting the big boys of crypto. But for now, take care, keep it tight.